Demand has come down drastically, and so more and more sellers are now willing to ease on their selling price, and this can make for pretty great deals. But you might say interest rates are doing a vertical up these days, and so you feel that prices need to come down more to make the numbers make sense. So let me ask you this. Is it better to get a great deal now with interest rates currently at 3.75%, or does it make sense to wait for prices to come down even more and buy when you see a visible bottom once interest rates peak? If you want to know the answer, keep watching. In this video, I'll walk through a complete numbers breakdown so that you can make more informed real estate investing decisions. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. First and foremost, we want to start with the fact that real estate investing should be a long-term commitment. And like all investments, prices can go up or down. And the reason we believe in investing in Toronto is because we believe in Toronto's long-term growth. Ever since 1976, for 45 years, the annual growth of Toronto real estate has been 7% per year. And if you add that to the net rental income with a 20% down payment plus closing costs, you're looking at an amazing average ROI of 24% per year. Now, I agree, buying in today's market seems like a riskier move. All you hear on the news these days is that interest rates are going to skyrocket and real estate prices are going to plummet. But like always, we believe in making numbers-based decisions. And if you have strong holding power, real estate investing can still make sense as long as you're committed to a long-term horizon. Now, let's take a look at an example of what a good deal on the market might look like these days. Here's a sample investment property in core Toronto, and the seller is motivated and willing to sell at 20% off of peak prices, so he's willing to let it go for $1.1 million. So you might ask, is 20% really a good deal? Well, nobody knows for sure. Prices are dropping all around, but we believe that the level of drops depend on where and what type of property it is. The biggest impact is probably going to be in the suburban end user market, and the Toronto investment property market should be more resilient, and so our team thinks that 20% off is a really good deal. The catch here is that just like most freehold good deals these days, you have to do renovations. Here we're looking at around $40,000 of renovations, and then once it's done, the total rents are around $5,500. And after you deduct expenses and the mortgage using an interest rate of 3.75%, you are still cash flowing positive at $600 per month. If we assume prices rebound towards the end of 2024 and appreciation goes back to normal after that, then we're looking at an average of 8% annual appreciation using a simple average, which is better than the typical 7%. And so, based on current interest rates, the 5-year total return is around $690,000 or an annual ROI of 27%. We know we are not in an average market these days, and because we know interest rates are going to go up, you probably want to check that the numbers still make sense when interest rates are much higher. So let's see what happens if variable rates go up to 5.5% after you buy and stay that way for the next 5 years. Honestly, it's probably not going to stay that way for 5 years, but we'll use this as our worst case scenario just for number crunching. So here's another thing you need to remember. Because of the way variable mortgages work with the big banks, if you buy the property and you enter with a variable rate of 3.75%, your monthly payment will stay the same even when variable rates go up to a certain point. What happens is the interest portion goes up, the equity gain goes down, but cash flows stay pretty stable. But because the borrowing cost does go up, your 5-year total returns will drop closer to $615,000 or an annual ROI of 25%, which is still not bad at all. Now, here's the part that you've probably been waiting for. Let's see how this compares to waiting for the bottom. If you do that, it's very possible that you might end up getting a bigger discount, but you might end up buying when the interest rates peak. And so let's use the same 5.5% interest rates just like before. If you wait, instead of getting 20% off, it's possible to get 25% off. And this means you might manage to get a similar property for $1.045 million instead. So how would cash flows look like here? The big difference would come from the mortgage payments, which do go up quite drastically from $4,000 to $4,700. And so in this example, the holding power is much weaker and your cash flows end up being negative. If we look solely at net income, it actually doesn't change that much compared to buying today. What ends up happening is that the equity gain and the cash flows kind of get flipped. The bigger difference would come from the extra 5% off that you got, and so total returns do end up looking better at $670,000 over 5 years, or an annualized ROI of 27.5%. But remember the big trade-off. Instead of cash flowing comfortably if you buy now, you would be in a much weaker holding power position if you want that extra 2.5% bump in ROI per year. At the end of the day, a good deal will always be a good deal. If you buy today, in the worst case, if interest rates stay high at 5.5% over the next 5 years, your holding power and your ROI might still actually be better than buying in a normal market. And also, if you compare real estate to stocks, we'd say that real estate returns are much better than investing in the S&P 500 index and can also help you diversify and reduce the fluctuations in your overall investment portfolio. So if you do want to learn more about real estate investing opportunities in Toronto, just reach out. We're big believers in investing in Toronto freeholds and would be happy to share more about what deals look like these days. Once you're ready to buy, we will match you with the best investment property that fits your needs, help you buy it, give you renovations guidance, and offer you leasing or property management services if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.